Ladies and gentlemen of the crypto space, we're live on Thursday at 11:30 a.m., November 12th. This is hot times. This is awesome times. This is reassuring times, satisfying times, gratifying times. Can I think of another word times? This is exciting because what is Bitcoin doing? Bitcoin is ripping, and that's what we're all excited about today. Today's episode, as always, is sponsored by Change Angel, non-custodial swap exchange for social good. Stop depositing on exchanges. Trade your assets and retain your assets in your own wallet, not your keys, not your crypto. That's the bottom line. Today's topic, will Bitcoin breach 16K? Fundamentals and technicals. Clearly, that's a vague title for a stream, but it's exactly what we're going to do. Can't argue with that. It's spot on, baby. Let's pop it over to the main screen and let's see what's going on. Where are you? Where are you? There you are. The Bitcoin chart, $16,069. So it did print a new higher high relative to the local 15-minute relatively short-term price action. So clearly, if you're on the 1 hour, it still printed a higher high more or less. And it's really up there and close on the 4 hour, so I wouldn't really consider that overwhelmingly a higher high. Although that wick does look, you see, it's such a trivial amount of a higher high that it's almost not considerable or not meaningful in any significant regard. So the point being, let's pop it back on the 15. This is good price action to see. I think we're really close to what I would love. I would love for it to bloop, 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 bloop. Oh, you guys know me. What we're going to do is we're going to retest resistance, flip support, print that new higher high, and bam! For you precautious, for you hesitant folks that need excess confidence, there's your entry, the higher high off a resistance flip support type moment. So what's so awesome about this is notice the 200 EMA. 200 EMA is completely consistent with the trend line of support. So this is averaging up. Look at the slope on this. So this has a slope because you see the red line of support, but there's a slope here. You see the green guppies. That is definitely an ascending price action, higher lows. Let's pop it in the 30. Just flip it through the time frames for the fun of it. I mean, look at these. Look at the 200 EMA. Look at the slope on it. Even on the day, this looks good, guys. This is looking good. 4 hour, 1 hour. Look at that slope. Look at that slope. Gorgeous. Good to see. Who's the stream? What's up? Dave's in the house. Always a pleasure. Did you bite or just nibble? Yes. Disanisa? Yeah. What, a little rocket ship action? Well, we're going to go through a couple of my favorite assets today. I popped up a new one. I got a loop ring up here. There's ZK roll-ups. Could be a big deal. We'll talk about it. Barry's in the house. Always a pleasure. Bitcoin is on track. You're damn right. Craig's in the house. My man. Haven't seen you in a bit. Good to see you. Welcome as always. So I got Tesla up here. Interesting. We'll go through the charts from the start. Whoever's buying this stuff's got either balls of steel or no brain cells, man. I mean, anyone who can see, I mean, check this out. Let's go out to even more what I'm looking at. So this thing, if you crunch it together to a scale time frame, this is the time. This is what you're looking at. People are buying this. It's straight up, and clearly, if you go to the weekly, who's buying this? This is the most disgusting asset. It's not. This is not the stock. So this is not the. This is gross. This thing it's straight up. Who's buying this? No one in their right mind's buying this. So if I zoom in on the most recent price action, what do you got? You got a sim triangle coming off price action that is not sustainable. A sim triangle is break direction agnostic. There's no reason for it to break up or down. It usually breaks in the direction of the prevailing trend. But guess what? The prevailing trend isn't bullish in the equities market. The prevailing trend is questionable how much higher it goes in the relatively short term. Now, clearly, if Congress gets their act together, which is what everyone expects them to do at some point, is to print, 10, 15, 20, $30 trillion, they're going to print countless trillions more. And it's full on MMT, guys. So if there's no MMT, you're talking about deflationary implosion, and we'll have stagflation, as George Gammon talks about. And we'll have some hard times for the less skilled, lower waged population. I expect this to, my prediction, my expectation is we're going to have a serious market correction prior to extreme fiscal stimulus. So that's my expectation. I see no reason why I would take this risk. I mean, it's just such a risk. I mean, even if you're looking at it in the relatively short-term time frames, to me, this is a bearish symmetric triangle because you have a massive run-up and then, frankly, a complete retrace. This is a bearish symmetric triangle. So, you could say you're coming off bullish momentum, but there's some seriously notable bearish indications or bearish price action in this trend formation. I don't trust it for a second. I don't trust the stock market for a second. And guess what? Unfortunately, I really look forward to owning the stock. I just look forward to owning it down here on the weekly when you have a mean regression down to the 200 EMA. I'll buy Tesla when it's at 150, 175. Dare I have Warren Buffett balls of steel? I'll buy it at 100, 125 if it crashes below the 200 EMA. Come on, there's dips below the 200 EMA. Look at this. You got dips down here. So why can't you have a dip? Even if you look at the S&P, there's dips below the 200 EMA on the long-term time frames at times. Clearly, it's massive bubble after 2000, but that's another story. Stelios is in the house. Always a pleasure. Hey, dude, Bitcoin's ripping. Let's go back to the Bitcoin chart for a second. 16,108. It's nice to see that it's holding above. It's not holding above the previous high because this wicked up. Let's zoom out to the 4-hour. Let's see. So, I'm not going to go as far and say that this is really pushing up or you got a series of higher highs, higher lows. But this is nice movement. What I was looking for was the breach of the orange line. The orange line was the previous high. So it's nicely above it, but we could easily see a retest and we could easily see it fall back within trend formation. No reason you can't fall back down there. And I don't really see this breaking down. I think, I don't want to apply too much of my bias, but I think people are exhausted. They're exhausted with this virus. They're exhausted with equities. They're exhausted with bonds having 0% yield. Obviously, standard bank accounts are worthless. There is absolutely no intelligent, logical, or rational reason to deposit funds into a bank account. I have no idea. The only explanation is they don't know any better. Because that might be the biggest mistake financially that anyone does. A savings and a checking account. I mean, what you need is, all right, fine. You need it for the credit card and the debit card functionality because every stupid company in this country accepts dollars and they're still stuck on this legacy system. But that's the biggest mistake. The reason I see this more likely than less, to continue appreciating the Bitcoin chart, that is because I see people exhausted with the legacy system, exhausted with banks offering no yield, exhausted with bonds likely going negative. Treasuries are worthless. Who in their right mind is going to buy a treasury? Who in their right mind is going to lock up money for a decade for a fraction of a percent APY? Ridiculous. Ridiculous. It's dead. It's literally like, compared to anything we see in the crypto space, the legacy financial system seems like a corpse. And the only reason anyone are still playing with that is they're either they don't know any better because that's the industry of equities investors for their whole lives. They don't know any better, which is the same thing. Or maybe I think that's all it is. I mean, it is companies. You're dealing with the companies. The problem is the equities market doesn't reflect the companies anymore. So maybe it's faith or hope. You know what it is? That's what it is. It's faith and hope that the status quo is going to remain somehow, that it's not going to change. And as I keep saying, um, uh, people are exhausted. They're exhausted with the legacy system, just how decrepit it is. It's failing. It's literally like in the process of failing. This is like a slow motion crash and burn if I've ever seen anything like a picture like a celestial event. It takes like 10 million years for like a black hole to consume a hypernova or something, or a binary pulsar system, and they spin and they collide together. It takes millions and millions of years. That's like what the economy's doing right now. It's a slow motion train wreck. There's nothing exciting about it at all. Let's see what's in the stream. Kel says, any advice on what to mine these days? Man, what are you talking about? Proof of work? um, Proof of work. Zcoin? Is Zcoin still proof of work? Man, the problem is the hardware, and the problem is the electrical costs. Electrical costs have continued to appreciate, and they will continue to appreciate into the future, nonstop, unabated. So your costs for mining are continuously increasing. The only way to execute a successful mining operation is really from a business perspective. You need a business plan. You need your cost, your expenditures, your P&L, your full economic analysis. You borrow money. You never do it with your own money because you never risk your own money doing a business venture. And you set up shop with full alternative power. You got solar. Maybe you can imagine there's an operation where the electricity is free. And that's the only real way to do mining. There's no free coins. There's no free that we're 9 years past free. If this was 2010, 2011, 2012, probably up until like 2014, then it was like, but then we only know that in 2020 hindsight. Ain't that a bitch? Dave says possible rising wedge on Bitcoin. Um, well, clearly on the shorter term, this is a sim triangle. So it did break to the upside, but let's zoom out because that's really what matters. No, no, that's not a wedge. No, I don't see it as a solid formation. If anything, it's a bit of a channel. There, see? I mean, this is just broad strokes, guys. If anything, it's a bit of a channel, but it's off obviously. It's a megaphone ish. So I just wait. I don't see the long-term price action. What's interesting is this is uncharted territory. Zoom out to the weekly. There is very little history of us in this price region. We're above this orange line right here, and this orange line is pretty much the only thing you have is a wick past 17, and then you have the bars, the two bars that the 2 weeks that we spent closer, up there, 18, 19,000. Um, so this is uncharted territory, which is really exciting. And it's just people are exhausted, and this is where they're parking their money because this is a no-brainer. Everyone sees the systemic instability and risk all over the place. And frankly, for me, I don't see risk. I see this as the future, and I see this as the appropriate place to park money. This is the smart money nowadays, guys. I love that we're above this orange line. And, we need more data for a trend formation. And frankly, this is actually nice price action to see. So we breached this orange line with relative um, lack uh, lack of exuberance. There's lack of irrational exuberance. This is quite a nice steady incline of higher highs. Look, higher high, higher high, and I go higher high, and then you got the higher lows. There's a bunch of higher lows. So that's a good deal. So this is nice price action over the last 3 days. But because this obviously was a lower high, but we've had series of higher lows since November 4th. Not bad, 8 days. Pretty cool. Anyway, in the past 40 days, with all the volatility, the rug pulls, the scams, the hacks, the exchange regulation, is this a beast? The biggest bull cycle? Well, the rug pull. Listen, nobody was involved with that. I'm telling you, I say that because the amount of people playing in DeFi is minuscule. The amount of people stupid enough to buy this garbage on Uniswap is even smaller. So that was really, I don't think, experienced to any large scale degree, with regard to the vast majority of the crypto population and the crypto participants. That was only really people, frankly, a lot of people lost a fair amount of money, I'd imagine. I did hear of a lot of rug pulls, but I can't fathom the participants. I guess those types of participants are the people that send money to, send me 1 Bitcoin, I'll send you back 2 Bitcoin type scams. It's just, you could copy smart contracts, guys. It's just really silly. Uh, so there's all, I like here, like Pickle, was it Harvest? Seal Finance, Simpsons Finance is another one. I have no interest in this stuff, guys. You guys really sitting around thinking you're gonna retire off of something? You're gonna retire off Harvest Finance? You're gonna retire off Pickle? You're gonna make money? You're gonna make good money, long lasting, and you don't have to worry. What's the risk analysis? I mean, this is really cool graphics, but that's besides the point. What's with Homer? Looks strange, but just this, on the other hand, is real deal. This is Yearn Finance's Ape Vault that Andre cranked out. So this is obviously a preliminary implementation. The user interface is not baked into the Yearn site directly, but this is a heck of a vault, guys, and this has to do with Curve, which we've talked about this page. We've talked about Curve many a times, and this is real right here because the yield is coming from the transaction fees of the platform. This is next level. This is serious. This is really cool. Um, this Anissa says good POS these days. Yeah, BlockNet's real deal. So, but if you have the capital on the side, it's a speculative bet. So bear in mind, proof of stake is not yield because it's inflationary, which basically means you are maintaining value. As the supply increases, the value of your assets are diluted. So you get the inflation, so you might be going up in the quantity of assets you have, but the value of all your assets are not increasing because it's an inflationary asset. Proof of stake is inflationary. So unless there's a deflationary component or incentivized supply disruption, the reference I always go back to is synthetics. Synthetics is like 50% inflationary, but the amount of supply disruption is overwhelmingly compensates for the inflation rate. And it is cumulatively net deflationary. Synthetics is one of the most incredible monetary experiments in the entire crypto space. Net deflationary with an inflation rate of like 50%. Absolutely incredible. Absolutely incredible. Um, but yes, BlockNet is one of my favorites. Is it not? Is it speculative play in that it's barely traded? You're not going to find liquidity anywhere. But the software is absolutely incredible, and the technology, I think, could change the world. Change the crypto space at least. Igor says U.S. dollar is still strong as fiat. Yes. Well, that's the Brent Johnson and Raul's dollar bull concept. It's the worst of the garbage, and that's right. It will collapse last. It's spot on. And who knows? I don't know. I'm not the smartest person in the room with regard to global macroeconomics. And then that's why you have to watch Raul. You have to listen to Brent. You have to listen to Lynn Alden. And you have to watch George Gammon because he makes it nice and simple for us potato heads. And I think I like George the best because he makes it the easiest to understand some of these very sophisticated uh, relationships between entities. Uh, he talks about the central banks and the primary dealers and the private banks, and he's very good, George Gammon, at describing these sophisticated relationships between financial structures. Dennis says, "Can you check the Bitcoin dominance?" Want me to check the dominance? Let's check it out. Load them up, baby. Load them up. Listen, Don't worry too much about the dominance. And frankly, this is really all I care about. We're below the weekly 200 EMA. So unless this breaks above, we're not going to have a significant shift in dominance, which means, but what is dominance? Dominance is the Bitcoin price relative to Ethereum. Why are you fighting Bitcoin versus Ethereum? Bitcoin is ridiculous as a store of value, and Ethereum is going to change the world with its financial products and services. Oh my God. You need a nice chunk of Ethereum. You need a nice chunk of Bitcoin. Now, me personally, I lean towards Bitcoin. I think the Bitcoin narrative for as a treasury asset, as a risk-off asset, um, as a pristine collateral asset, as Raul calls it, I think that is a stronger narrative in the short term. Because I think in the times of financial instability and questionable uh, global everything with regard to financial systems, that's where you want gold and Bitcoin. Now, Ethereum is clearly disrupting everything with regard to DeFi, and the power of the smart contract protocols allows for basically the inevitable disruption of legacy financial products and services. Banks are done. Banks are literally. Do you guys realize banks are like getting attacked by crypto space with DeFi, and they're getting attacked by the central banks who want to get rid of them. The central banks almost likely, if not quite likely, need to bypass the banks, the private banks, and which will ultimately lead to either significant devaluation or inevitable demise. The CBDCs and Fed accounts will have to bypass the banks. They can't go through the banks. There's no way they can manage that type of relationship and that kind of connection. So we'll have Fed accounts, and that's exactly what some bills in Congress are attempting to pass. So don't worry too much about the Bitcoin dominance. I expect. I don't expect much out of the Bitcoin dominance. I expect Bitcoin to outperform Ethereum in the short term. Ethereum could easily outperform Bitcoin in the long term, but not a big deal. Both incredible assets that are going to change the world. Stelio says, "Man, the first time I saw it, almost sent some. Sent some? Oh no, no, no! Don't send one, get two. Don't do it. Don't do it." Igor says, "Can you please give advice on running a blocknet node?" Yeah, man. It's so a lot of folks are new. Been around many years, and we had a whole masternode craze back in like 2017, 2016, 2018, and there are forks of Dash, and there's so many masternodes, and I have a lot. I still have all these legacy masternodes. Um, what do I got? I got Blocknet, Syscoin, Zcoin, StakeNet 4, Alquo, Polus, Calculus. I wonder if they're still around. Yeah. So it's you need a machine, you need a server. And you're going to have to either compile or download the binaries from the GitHub, which is basically the daemon. The daemon is the core component of the Qt wallets that you guys maybe have downloaded. I mean, most of you guys have just been playing around with Ethereum and like MetaMask, and that's like this new school stuff. Folks don't know what it was like downloading 10, 20 different Qt wallets to handle these separate blockchains. I mean, guys, there's more than just Ethereum. There's actually separate blockchains, and these blockchains, you need a wallet that interacts with them, and the core of the wallet is a daemon. And Blocknet is a separate blockchain. It requires a daemon, and the customizations, modifications done to that daemon offer service node functionality, which allows your service node to participate in the BlockDX platform, provide X router and X cloud functionality to the network. So the Blocknet service node is, you guys know, I've talked about it. We had Arlen on the stream. Blocknet, the daemon is, as I said, either a binary download or you can compile it from source, and it needs to be running 24 hours a day, 7 days a week. So historically, I did have a cloud instance at one point running, but I just keep a server in the house. You slap together a computer. Bear in mind, you need a fair amount of RAM because the BlockNet service node is only really useful if you're running like a bunch of daemons. You got to have Bitcoin, Litecoin, Digibyte, Syscoin, but like 10 daemons, and that's the whole point of BlockNet. It allows for anyone to interact with the BlockNet daemon network, the nodes, and uh, query uh, basically have RPC access in a disintermediated way to the nodes that a service node is offering to the network. So you really, if you have 10, 15, BlockNet nodes operating on a service node and whatever else you're doing on that machine, you're talking about like 48, 64 gigs. You need a nice server. I think I have 48 gigs on my server, 2 terabyte hard drive. I mean, you don't even need a graphics card. I don't have a graphics card in my machine. I just run it off the internal Intel chip, and it's just a terminal. My entire server is just a terminal. So you could do that. It's not trivial, unfortunately. It's not trivial. Um, but there's plenty of documentation. Yeah, BlockNet service known setup. I guarantee it's first on the list. Docs.blocknet. Boom. I mean, look here. Introduction, setup. And here's all the documentation you need. I mean, it's not trivial. It's quite technical. So you have a collateral, and you set up so you have you don't keep your collateral on the server. You keep your collateral on like a computer, and you're able to start your service node from your computer. And from your computer, your collateral node is offline. It's encrypted, so you're able to keep it securely. But it's not like not your keys, not your crypto. There's no ledger for BlockNet. You have you're the daemon, and then you kind of want the daemon on your computer because that's how you run XLite, and that's how you run uh, XBridge and BlockDX, and that's how you run the BlockNet services, the DEX and the training platform. So you kind of want to experiment with these things. That's the deal. Yeah, my man. So what else? Stay away from the Simpsons, Seal, Harvest, Pickle. What a waste. What a ridiculous. Maybe they're meaningful, but what they are? They're experimentation, and that's risk. And I have no interest in risk. I'm not taking any risk. I work too damn hard for my money, ladies and gentlemen. I'm not taking any risk. Now this is what I love right here. I love this ape tax. I love uh, I love fighting to have retained my proportional ownership of VECRV because that entitles me to a proportional percentage of the daily platform transaction fees. So I get $11 a day, and that's off $47 million of daily volume. So if they did 4.5 billion dollars worth of daily volume, which seems like nothing in the global financial system, I'm making $1,100 a day, and that entails I retain proportional ownership of my VECRV position. Now bear in mind, maybe it goes to $40 billion a day, and that would be $11,000 a day. But instead of owning what I own, I'm diluted, 90%, or I go from 0.1% ownership to 0.01% proportional ownership of the E-curve. So instead of the $11,000 a day off the $50 billion a day in trading fees, I'm only earning $1,100 a day. Womp womp. So my goal is to provide some liquidity, and I'm getting 32.93% from this compound pool, and that gets accumulated here. 213 CRV, 123 from my vesting from the liquidity I provided historically, and I'm able to zap that directly into my vault balance. So here's another 440, and then curve. There's got that 33 chip, so that's accumulated from basically liquidity. So the vast majority of my curve was literally, I didn't buy it. It's because I participated in the network. And the fallacy and the unfortunate thing is a lot of people bought curve, and they shouldn't have. They didn't. They needed to ask questions and make different decisions because you don't buy it. You get it. You receive it as compensation for participating in the network. Um, and people bought it thinking it was going to go up. So maybe there's a speculative play to be made, and it sure as hell did rip up. And frankly, the 200 EMA on the 30-minute looks pretty good. That's nicely sloping upwards, and it looks like there's nice support. Look at this. Look, it's not printing a lower low right there. So that's nice to see. That's nice to see. I think there's good cause for the price of CRV to appreciate, but that's not the investment. Who cares? There's so many assets that you could buy low and sell high. Why are you going to do it with Curve? Why are you going to fight what the platform really is supposed to be? It's a governance asset. You should be voting in the Dow. And the purpose of Curve, the awesomeness of Curve, is that you have proportional ownership, proportional rights to the daily transaction fees. So stop buying Curve for the purpose of hoping Curve is going to go up in price. If you want to buy stuff, you buy Bitcoin. Risk off. What are we at? Look at that, 6,174. Bam, new high, local high. And Ren and Loop Ring. I had a Loop Ring position for a while. I bought a lot of Loop Ring back in March. I went like 500% on it. I got out of that. I got out of everything back in September when I was screaming, high heavens, risk off, risk off. We went risk off, and now we're November, and we're still risk off, but there's reason to consider a little bit of risk. Let's take a look at Uniswap in the 24-hour filter for a second, because we've seen some meaningful price action of late. But look, that's yesterday and the day before we had some serious rips, and Aave was ripping 80%. Here, 84%. And you're 83%. Look at the DeFi rips to the upside. But look, if you look at it today, guys, nothing. I mean, Quant's good to see. It's good to see. Santiago Velez loves Quant. If he loves it, I like it. He's brilliant. But look at these. The point being, look at the 24-hour short. This is not irrational exuberance. This is not. So this list right here, this is what it was yesterday in the 24-hour chart. It was hot. But it's not irrational, because if this was irrational price action, we'd see it today. We'd see 20% today, 20% today, 20% today. So we're not there. This is not risk on. This is risk off mode. This is Bitcoin, and this is yield. When I say yield, I mean curve. I mean liquidity. I mean rent. I mean dark nodes, APY, Celsius, and BlockFi. And take care. Don't take too much risk. Never put all your eggs in one basket. Never go all in. Never spread too thin. And that's the name of the game, ladies and gentlemen. 12:03 p.m. on a Thursday, November 12th. I thank you all for sitting with me, as always, for 30 minutes. Smack those thumbs up buttons. Tell everyone to subscribe. And I'm going to see you for Friday. Friday tomorrow, we're going to figure out what's going on. Well, maybe we wake up and we see Bitcoin at 17K. And then we're going to have a hell of a stream. I wish you all a wonderful day. Peace.